Hi, Mike Coe here, joining you from Park City, Utah. If you're watching the TV behind me, you know that CNBC is still covering the Winter Olympics from Beijing. Also with me, Carter Worth, joining me from New York City. Today was an interesting day. After we heard from Biden and we can see that the risk of Russia invading Ukraine declined, a couple things happened. Obviously, equities rallied. Interestingly, we also saw 10-year rates rally, and we saw oil decline fairly precipitously. Carter, you were saying that over the last couple of times we've talked about oil prices, that they are pretty much directly correlated with the risk of an invasion there. As that risk rises, we would see oil prices rise. As that risk falls, we would see oil prices fall. That seems to be what's happening.
Yes, on a day-to-day basis, obviously, were you to have something, as they used to call a dust-up or something more severe than that, oil really will rock to the upside. But day-to-day, it looks like there's a bit of a calmer heads prevailing, so to speak. But what we do know is that basically oil was 65 a barrel at the end of the year, plus minus January, and it up 50% to 95 a barrel. That's a big move. A lot's priced in, and sure enough, with a little bit of a détente today anyway, crude pulled back.
Yeah, we also saw a lot of options activity going on in some names that we don't talk about very often. The first one we're going to talk about is on my Holly index. What's my Holly index? Basically, I just track what it is that my wife purchases, and what I have found is that there's a pretty good correlation between her purchases and whether or not you should be purchasing the stock. And the first stock we're going to be talking about is Oatly. This is the beverage maker that makes oat-related drinks. Now, this is an ADR. The company is relatively richly valued at about 7 times revenues. But this is a company that is also anticipated to grow its revenues by about 58%. We saw well above average call activity in Oatly today. Some of the activity we saw, for example, the June 7.5 calls, we saw over 2,600 of those trading for about $1.65. So, Carter, what do you think about the charts in Oatly here?
Well, this is a new stock, of course, and what we do know is it's down and to the right. There's no other way to characterize it. It's been very unhappy. You're talking about a 78% decline from where it was last spring. But the question is this the beginning of a bottoming out formation? Take a look at the next chart. It shows the clear trend line that Oatly has been sort of descending. And you see where it has failed on the trend each time. And we can see that here you start to fail at the line, and then Oatly is starting to turn. And if we take a look at the next chart, you'll see the arrow that I've drawn. And so my thinking is that this is the beginning of something developmental. It's nascent, it's young, but I believe that it is what is about to happen. We're going to approach the line yet again, and then actually push through.
Yeah, I mean, this is definitely one of those interesting circumstances when we have companies that have very little operating history. A lot of times the thing that's going to matter most to us is the momentum in the share price. It's indicative of whether real money is beginning to flow into it or not. We definitely saw some real money flowing into some upside call purchases on Oatly. So another interesting name on a valuation basis is Newell. Now, Newell is a company that makes Rubbermaid products, Calphalon products, Sharpie pens. If you're familiar with all of those, then you're familiar with Newell Brands. Now, this is a company that reported earnings on the 9th. They beat by a nickel in EPS, but they also raised guidance, and the stock rallied sharply on that news. But here's something kind of interesting about it. Despite that sharp rally, the stock is still trading only about 13.5 times earnings. Carter, what is your thinking on Newell in the near term?
Right, so immediate strength, just as Mike, just as you've said here, earnings base. But let's pull it back and then get to the present. What we know is a strong move off the COVID low, and then it breaks trend. If you look at the next chart, you'll see that, of course, instead of an uptrend, we've been in a downtrend. But now we're breaking trend again to the upside, hence the pink line and the move above it. So another way to draw the lines, you'll see it here, is it's converging trend lines on the next chart. And so what that depicts, right, is the resolution of this standoff. You see the converging lines, and then you see how I've drawn the arrow. And what we basically have is a resolution of the standoff. And so my thinking is this day-to-day strength, while it is news related, is the beginning of something more important.
Well, if Newell Brands was cheap, Sibanye Stillwater, the South African-based miner, is much, much cheaper. So we saw a lot of call activity in the South African miner today. Now, this is a company that had historically focused a lot on the precious metals. They have exposure to gold, they have exposure to platinum, and they are using some of the benefits that they're seeing in rising prices for the precious metals, which we've previously spoken about, to try to pivot their business actually towards battery metals. Now, they are also involved with palladium and rhodium. Those businesses are proving to be a little bit of a headwind. And, there's a lot of an operational risk going on when you try to take a business like this and migrate it to something new. The thing is, it is trading incredibly cheap. Right now, it's trading at about a 2.5 times enterprise value to EBITDA multiple, about 4.4 times earnings. This is a cheap group generally, but this stock is very cheap even to that. If you take a look at the analysts that cover it right now, they're all bullish. Of course, I think one of the things that we're dealing with here is the operational risk of their business pivot. But the bullish activity suggests that some call buyers are thinking that maybe now we're going to start seeing a move to the upside. Carter, what are the charts telling us?
Interestingly, it's very similar to the last setup. So take a look. We have a well-defined uptrend. And then, of course, we have a well-defined downtrend. But we have moved above the downtrend, and that's important. Another way to draw the lines is it's a head and shoulders. If you put all of them together, the final chart depicts all of the lines. And so my thinking is this is strength that is, again, similar to our last instance, nascent, and one wants to start to embrace it if one hasn't already.
This is an interesting company because it's one of those few places where we get to play one of the trends that we've been talking about, which is the strength in the precious metals, but also potential growth areas such as mining for the battery metals. I'm Mike Coe. Really appreciate you guys watching. Please, if you like the content, give us a good thumbs up. Carter?
That's right. And if you want alerts, of course, when we post our next video, subscribe and hit the notification bell. Have a great evening.